Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB this Friday afternoon. I'm Juliette Sarli. Lovely to have your company on a day when we have seen the CIBO 200 just try and edge into positive territory at the end of the day's trade. It's pretty flat there, down less than a third of 1 point. The S&P ASX 200 index is a little weaker, but still, you've got to say pretty encouraging given all the uncertainty, given that we're going into the weekend. There's these peace talks ahead. Down 19 points, 0.2%, 8,954. Now, over the week, the S&P ASX 200, has gained 4.4%. That is its best week since October 2022, despite all the uncertainty, and really because of that relief rally when the ceasefire was announced Wednesday our time, and we saw the market up by some 2.7%. So getting into the themes of the day, and really it is, what a week, because if you think about where we were at the start of the week and still so much uncertainty, some of that really inflammatory, if you will, rhetoric coming through from the US president on Truth Social about what he would do to an entire civilization if the Strait of Hormuz was not reopened. Then we had, I guess, somewhat of a shaky ceasefire being arranged between Iran and the US, and we're going to have these peace talks in Pakistan at the weekend. And then, of course, as I mentioned, that relief rally, which has sent the market up by 4.4% over the week, and really not that far off all-time highs. There are, though, still, of course, these truce troubles. We've got this 10-point plan from the US and the Pakistan talks, of course, coming up over the weekend. You've also still got the closure of the Strait of Hormuz, and there has still been, of course, concerns between what's happening with Israel and Lebanon as well. And then a bit of a weakness in the overall tech sector. The tech sector off by 1.7%, and there has been some, I guess you could say, tanking earlier in the week too, when it was down by something like 7%. Today, most of the sectors are lower, in fact, and it really is those energy and IT players that are under the most pressure. Let's have a look at some of the stock specifics in those sectors, kicking it off with what we've seen in tech. And I will point out, though, that I think Zip was actually tracking higher, but if we look at where the tech stocks are finishing the day's trade, if they're there, otherwise I'll tell you that the sector is down 1.7%. There you go, Life 360 off 4%. Now, this was interesting. The CEO, Lauren Antonoff, announcing on LinkedIn some layoffs due to AI. RBC Capital pointing out that that wasn't an ASX announcement, but still, to Henry Jennings' point earlier, AI is coming for all of our jobs. Life 360, they're down by some 4%. The banks, Henry mentioned as well that he thinks they're quite a good buy, although I will note that Citi has a sell on Bendigo and Adelaide Bank, which rose very sharply yesterday on its AI plans and job layoffs. CBA, it is looking pretty solid there, pretty punchy in fact, back above $180 a share, up 0.5% today, and all the big four up by about a third to 0.5%. Looking at the gold stocks as well, a little bit of mixed movement there. You did see gold rise overnight thanks to a weaker dollar lending some support. Northern Star and Genesis higher, but Evolution, Newmont and Greatland a little bit weaker today. Fair bit of company news out today as well. Telix Pharmaceuticals was in focus. It has the US FDA approving its drug application. I spoke to Ryan McCafferty from Sandstone Insights, also Henry Jennings from Marcus today about this stock. Both of them really like this, and you've got to say as well, if you're into ethical investing, I mean, they're just doing such fabulous stuff in terms of that brain cancer imaging. I mentioned Life 360 as well. The CEO, Lauren Antonoff, announced the company has parted ways with an undisclosed number of employees as it shapes its business for an AI future. Fortescue saying it will eliminate fossil fuels across part of its Pilbara operations as early as next year, bringing forward its decarbonisation timeline. AMP holding its AGM, Blair Vernon, the CEO, saying the financial services firm will prioritise growth in its wealth division, expand its use of AI and tighten capital allocation. And Magellan Financial Group, well, more than 90% of shareholders voted on the $1.6 billion takeover of Barrenjoey, voting in favour at that EGM. Let's welcome to the COB our Friday guest, Shane Oliver from AMP. Shane, great to see you. And I mean, what a wild week for global share markets. We're up something like 4.4% on the ASX this week.
We certainly are. It's been a very strong week, obviously on the back of the Taco Tuesday announcement that came just before that deadline kicked in. And our market has started to anticipate some sort of back down by Trump. But that's the main reason there. Markets are thinking that we're on the off-ramp towards peace, and they're celebrating that. So consequently, you've seen this huge rebound. Roughly speaking, share markets are up something, or have recovered something like 2/3 to 3/4 of their slump, the slump that occurred from earlier this year, the highs of earlier this year to the lows into March. So you've seen a massive turnaround there. A lot of faith that the ceasefire will hold, that it will give way to a permanent peace, and that it will see a flow of oil resume through the Strait of Hormuz. Lots of uncertainty around all of that, though. You just got to look at the oil price. I went away for 2 weeks, and the oil price is about where it was 2 weeks ago, just below $100 on West Texas. So you can argue that, yes, it went up a lot higher until earlier this week, and then it's just come back to where it was, but it's still way, way above where it was before the war started. It's also going to take some time before the flow of oil resumes. It's going to take weeks, if not months, to get oil flowing from the shuttered fields in the Middle East. And it will take longer for gas. Then you've got to put it on ships and bring it to countries like Australia. When you look at those numbers through the Strait of Hormuz, I know there's been lots of talk that it's not really shut, that ships are still getting through, but the reality is that the numbers are a fraction of what they were before the war started. And that, to me, is the key in all of this. Unless you see that pick up, then oil production will remain locked in to the Middle East. We're looking at a shortfall presently of around 10 to 15% of global supply, and that will remain in place. Now, at present, we're drawing down on reserves globally, and there's been some diversions in the Middle East away from the Strait, but those things still leave a gap. And once we run down those reserves, then obviously it will become a major problem. So there's still issues out there, but obviously markets are celebrating that there's maybe light at the end of the tunnel.
Yeah, absolutely. Although the light is not at the end of the tunnel for those of us trying to fill up our car. Marius was just telling me about the increase in bike usage as well. Tell us about Aussie's petrol bills. I know you've done a little bit of research into this.
Well, that's right. Petrol, in the great scheme of things, doesn't look too bad. Of course, if you've got an EV, you're feeling a lot happier. But petrol, on my calculation, the average Aussie family or household would have been seeing a surge in their petrol bill of around $31 a week. Up until the end of March compared to February levels. That's been cut back to around $19 a week, but it's still a hefty rise. If you look at it on a monthly basis, a typical Aussie family has to find an extra $80 a month to fill up the car, and that is once you allow for the impact of the GST and excise reductions that occurred at the start of this month. So that's good news. If I did that same chart, though, for diesel, there's been no improvement. There was a brief decline last week on the back of the tax reductions, but if I look at diesel prices on Motormouth this morning, they're back where they were at the high point, and if anything, they've gone slightly higher in most cities. So there's been no reprieve for diesel car users, and obviously that's a big issue for transport in Australia. But the bottom line is that whichever way you cut it, with the excise cut or not, you're still looking at a big hit to households, and that will act as a constraint on spending, and it's obviously going to be a constraint on consumer confidence and all sorts of things. So that impact is still out there. You're still, on my calculation, fuel prices are still up at least 1.1%. If they stay where they are, they're still up 1.1%. Or they're still going to make a 1.1% contribution, rather, not just 1.1% rise. They're up about 35% or so. And it's even with the fuel excise cut. If they stay at that level, they'll be up about 35% on where they were on February levels, which will mean a contribution to inflation of 1.1 to 1.2 percentage points, which is why economists are still talking about inflation heading up to 5% or maybe just a little bit higher.
Yeah, exactly. And we've got one of your charts on inflation as well. This is going to be worrying the RBA in terms of this global inflationary shock pressure. It also means we're going to have probably less money to spend, so maybe it does some of the RBA's work for us.
It probably does. It does hit both ways. Most central banks have acknowledged that. The Fed minutes certainly did that when they were released a couple of days back, and likewise the RBNZ yesterday. Now, Wednesday, I think it was, when I was returning from leave, they had their meeting, and they leaned a bit hawkish, but they acknowledged there will be a dampening impact on growth. But the inflation issue in Australia is a more pressing one, and you can see in that chart there, obviously the ABS number is what the RBA focuses on. The green line's now the black line, and that was above target before we went into all of this. And you can look at the Melbourne Institute's inflation gauge, and it's sort of steadily rising. It's a bit lower than the ABS one, but it's been rising. The other problem is, and I haven't got the chart for this one, is the headline Melbourne Institute inflation gauge for the month of March showed a sharp rise to 4.3%. So it's starting to rise as those higher fuel prices feed through, and that likely will show up in the CPI numbers as we go through the current quarter. And obviously that will concern the Reserve Bank, because on the one hand, yes, we are going to see weaker economic growth, less spending. That ultimately will take pressure off inflation. But in the near term, headline inflation number heading up towards 5%. Talk of higher wage growth for juniors, those sub 20 years old, the would increase there for minimum wage rise. You know, the ACTU has been talking about 5%. The government's been supporting at least the real wage rise. That's going to see a pickup in wage costs for businesses. Those are the sort of things you expect to see. Inflation expectations rising, which will concern the Reserve Bank. So we do think they probably will hike again. Probably in May. Obviously, if the ceasefire sticks, then they might wait a little bit longer, but the risk is still towards more hikes from the RBA.
Yeah, that is certainly the risk, and of course then it's going to filter through into, as I mentioned earlier, whether or not we spend that much. So Shane, what are you doing this weekend to sort of get away from the wall of worry that we're facing?
Well, unfortunately, there's a little hurdle to get over, and that is that we've got another night of trading in the US, and so I want to be looking at the US share market tomorrow morning and see what new things Trump has said. In some ways, it becomes a bit of a comedy. On my count, we're up to, I think, the 7th or maybe 8th, I think it's the 8th backflip from Trump, you know, where he sounds real tough, we're going to do more, decimate the country, all that sort of stuff, horrible stuff that he talks about, and then a day or so later he's flipped back the other way. So there's always a danger in all of this that he just flips back the other way in terms of the ceasefire. Hopefully not. Fingers crossed that won't happen. But in any case, I've gone back to reading fantasy novels. I started many years ago with Tolkien and Stephen Donaldson, I think, when I was back in my 20s, and I still read them. I find them great to go to bed at night. At present, I'm reading a book by Brandon Sanderson, I think Sanderson. It came out, I think, back in the 2000s. It's called Mistborn, and I think there's about 10 follow-on books from this, so I'm just sort of getting through it at the moment. But I find that sort of stuff fascinating, and it distracts you from obviously the noise that we now see in global markets. I mean, I'm kind of lucky that I started my career 40 years ago when there wasn't as much data released. We didn't have monthly CPIs then. There was far less economic data. There was far less noise from politicians. Populism was in retreat. Economic rationalism was ruling. And we seem to be coming into a far more rational and sensible world. And yes, we would have falls like the 87 crash and the recession in the early 90s and the tech wreck and so on, but they were part and parcel of markets. Now it's become a lot more volatile, so harder to get through. So yes, I do read fantasy novels, like the Tolkien variety, but music to me is always the key. You know, I love getting a song in my head. It's a bit like meditation. Once you get a good song in your head, it takes over and drowns out all the noise, or can help drown out all the noise. So I think it's really important. In fact, I saw a study referred to the other day, maybe in one of the Australian newspapers, it might have been the Economist magazine, referring to the benefits of music in terms of calming people. It's a bit like chanting or something. If you chant, then you block out the noise. And obviously at this point in time, people like me need to block out some of that noise associated with investment markets.
Absolutely. I bet there's a bit of Tay-Tay on your playlist too, Shane. I know you love Taylor Swift, as I do
when I was
too.
away, I brightened up. I was in a shop somewhere and suddenly I heard Taylor Swift, and I thought, oh, this is really nice.
Yeah.
Opalite, actually, playing Opalite. And I noticed people sort of looked a bit brighter when they heard that song. I certainly did.
Do you know what? I was going to ask you what you think of Opalite. That is my favourite on her album, and that video clip. I don't know if you know the backstory of that, but absolutely phenomenal.
I love the video clip. I love the song. When I first listened to that album, like a lot of people sort of get a new album from an artist. Yeah, I've always done this. You know, I love Pet Shop Boys. I'll get a new album out. That's not as good as the previous one. And then you play it for a bit and you realise there's some good stuff here. And that was certainly the case with this one. But I reckon in the first weekend that I started playing it on Spotify, I will end up buying the CD. I haven't bought it yet, but I will. But I actually listened to it, I think it was 7 times or something, over and over. It turned out on my Spotify end of year thing to be the most played album. And I thought Opalite was the best song. Yeah. And I was a bit disappointed that it wasn't the first video, but then when the video came out, I thought this is fantastic.
Absolutely,
but it's
amazing.
Up there with other fantastic Taylor Swift songs. So
yeah, I don't mind the fate of Ophelia as well. I have the CD. Join me in supporting Taylor. She needs our money, being a billionaire and all. Shane, I jest, not, but yes, she brings us joy. Have a great weekend. Thank you so much, Shane Oliver from AMP. Getting back to the stock of the day, it was Telix Pharmaceuticals, and Andrew spoke to our experts, Luke Winchester from Merewether Capital, Matthew Griven from Maple Brown Abbott.
They've got an insanely profitable business with that core Illuccix product. Looking at that 4-year result that they recently announced, they report to the calendar year, 214 mil EBITDA just from that core precision segment alone, driven by that Illuccix product. I think what's hard for investors, and unless you're more attuned to the biotech life sciences spaces, it's a business that is quite open about the fact they're taking that cash, they're taking that profitability and reinvesting it quite heavily back into R&D.
Look, it's probably a hold maybe on the weaker side for us, just because it doesn't really fit the process. But I do like the management team. I like what they're doing. There is some optionality there. So if you do have a high risk profile, there could be one for you. Just doesn't really fit in our fund at the moment.
Do you see sort of compelling value? Because it's off more than 40% over the past year. Now, a lot of that was maybe a misinterpretation from the market, just in terms of obviously having to resubmit to the FDA.
Yeah, and that's exactly it. I mean, there have been delays and issues with the FDA there over the past few years. I think the stock got very overheated. You look at the valuation back a couple of years ago, it was probably well above where it should have been. So I'd say now we're trading more towards kind of fair value type levels.
You've worked hard for your money all your life. Now your money needs to work hard for you. Whether you're building, transferring, or drawing down, the right information makes all the difference. At Ausbiz Retire, you'll find the latest news and insights from trusted experts all in one place. Ausbiz Retire is powered by RAN, retirement income done differently.
All right, let's have a look at some of the market leaders in today's action. And I'm guessing no surprise, Telix is at the top of the list there, up 7%, AMP2 on its AGM update, and Mesoblast had a company update setting its share price up 3.4%. TPG and Pinnacle also doing well. The laggards in today's session include Aurora coming off that big move that we saw a couple of sessions ago, Super Retail, Champion Iron, Life 360, a LinkedIn post from the CEO about job cuts due to AI, and PEXA down 3.2%. Let's have a look at the small end of town, including Aspire Mining, BMC Minerals, and Pan Continental Energy. While to the downside, these stocks did not perform as well, including Limos Diagnostics and Calix. All right, tonight, of course, we're going to continue to monitor these peace talks coming up in Pakistan over the weekend. We'll also get US inflation for March coming through, a 3% annual rise expected. The US federal budget balance also due, and the US University of Michigan consumer sentiment is due. Now, next week, we've got PPI for March. We've got the unemployment rate and quarterly updates, including Evolution Mining, AMP, Netwealth, Transurban, and Zip. Let's recap where the local market has finished. It is pretty flat there, and the ASX 200, I'll just get you a quick read on that. We mentioned before, over the course of the week, the ASX actually had its best week since October 2022, and it's closed down just 12 points, or 0.1% to 8,960. In fact, up 4.4% over the last 5 days. The best week since October 2022. All right, we'll wait to see what happens in Pakistan over the weekend. Hopefully a positive, peaceful outcome. Take care and stay safe. We'll see you on Monday from 9:45 a.m. Eastern.